Well, everybody, I'm back. I guess that will be my slogan. I'm back. Can't think of anything better. So, unless you have any good ideas, let me know. Today, I want to talk about. Let me get my notes up. The, about no tax on tips. But before I do, I just want to point out today what happened. And I've talked about inflation in the past and stuff. The president today has announced that Japan and South Korea will be recipients of a 25% tariff on everything that we import from them. He likes to say that they're going to pay it. No, we're going to pay it. It's paid by the importer. So no company will absorb a 25% increase on cost of business without passing that on to us. So enjoy, I guess. We get to enjoy that. It's a tax increase on the American consumer. So let's go, I guess, right? So now that said, today I want us to focus on the no tax on tips claim that is supposed to be in the big, beautiful bill. And spoiler alert, not shocked, it helps sommeliers, casino dealers, and high tipped earners, not as much as your neighborhood server. And this isn't my numbers. This is the Yale Budget Lab. It says the richest 20% of tip workers get nearly $6,000. The bottom 20% about $74. And I'm not going to even figure out how much that is a day because it's not a lot. And I'll put up a little chart I have here from the Yale Budget Lab talking about, the net change for everybody. And if you're in the bottom 20%, you're getting a cut of $560. If you're in the top 20% of earners, you're getting an increase of $6,055. So I guess it's good to be on top. So I'll do two things. I'm going to do two things here. One, I'm going to talk to you what a deduction is versus a credit. And then I'm going to talk about some of the tax cuts that were in this bill for the wealthy and the rich. And then I'm going to talk to you about how no tax on tips is not really no tax on tips, because you were promised no tax on tips. So the no tax on tips is a deduction. And what is a deduction versus a credit? A deduction lowers the income you're taxed on. Example, a $10,000 deduction with a 22% tax rate saves you $2,200 in taxes. A credit subtracts directly from the final tax you owed. Say you get a $10,000 credit and you have a $9,000 bill. You get $1,000 back at the end of it. It will reduce your tax bill by $10,000. So it's much more powerful tool, and it's a better way to get money into people's hands. So the bill's no tax approach uses deductions, so the actual savings depends on your marginal tax rate. And I'm not going to get into that marginal tax rate because that can be a complicated topic for some people, especially if you're not used to dealing with this stuff. And I don't think it's going to be helpful here that much anyways. So you go, wait, Albert, they said it's no tax on tips, and the president said no tax on tips. But Scott Bessent, the Treasury Secretary, said this, and I'll put that up as well. An essential part of POTUS's one big beautiful bill is no tax on tips. A new deduction of up to $25,000 for hardworking Americans in tipped industries. Whether tips are received in cash or by charge, workers will keep more of what they earn each day from both tips and tip sharing arrangements. Promises made, promises kept. I would say promise made, promise not kept, because you don't get to keep more because it's a deduction, and you get your deductions filed when you do your 1040 at the end of the year. And for most people, that's February. I would say I usually try to get mine done February, March. It depends on what documents I'm waiting for. So before we go into all this, I want to talk to you about some of the tax cuts for certain industries or wealthy people got in this bill. So Alaska got this, so Lisa Murkowski would vote for the bill. Even though she said she didn't like it, she voted for it because she got something for her people. I don't think Todd Young or Jim Banks got anything for us, except for Medicaid cuts. And I covered that in the previous video. There's a new supersized deduction for business meals, though only for employees at certain Alaskan fishing boats and processing plants, with the measure stipulating the facilities must be located in the United States north of 50 degrees north latitude, though not in a metropolitan statistical area. That's Alaska. I was born in Alaska, Fairbanks actually, military base, Fort Wainwright. So if you are a, I guess, fisherman in fisher person, whatever, in Seattle, you don't get this benefit, but in Alaska you do, and at the 50th parallel latitude. There was a carve out from oil and gas companies because they don't get enough money from us already on tax breaks. $2 billion for the rum industry. Mitch McConnell secured a $7 billion tax cut for farmers that allow them to postpone paying some of the capital gain taxes they owe when selling off farmland. I am used to capital gains tax because I like to invest. It's something I enjoy doing, and everybody should learn somehow to do it. That said, if I make a sale, I have to pay taxes that year. If I sold, let's say, Amazon, I held it for 3 years and I sold it and I made $15,000 on it. I'm paying 15% of that, and it's got to be paid when I file my taxes. Because I get a 1099, I get my brokerage form, and I have to put that in my income, and I get taxed. So I guess these people are special, and they get to postpone that. There's also, and this one is only aimed at two people, because there's only two people I know of who are putting rockets into space. There's also a $1 billion provision allowing spaceports, which the legislation defines as any facility located at or in close proximity to a launch site or re-entry site, to sell tax-exempt bonds like airports. Okay? This bill also includes an expansion of a little-known break that Silicon Valley investors have used to nix tax bills on tens and even hundreds of millions of dollars in earnings from internet startups. So these people invest, they make a lot of money, and they get to avoid paying taxes. I don't know about you, but that's a tax cut for the rich. We don't get that. We work hard. All of us work hard. I don't care what job you're in. You can be the janitor. You can be a construction worker. You can be an ER nurse. You can be a pediatrician. You don't get that ability to not pay taxes on income you earned on your investments. Like I just mentioned, I pay taxes on my investments when I get in and out of them. So there's that. Oh, also another $26 billion to create a new $1,700 tax credit for people who give to groups providing scholarships for children to attend private school. I don't know. I don't know how that even made it into a bill. I didn't write it. So let's go back now to the no tax on tips. First of all, the taxes aren't eliminated. Even if they eliminated the tax on tips, which they're not, because it's a tax deduction, and I explained what that was earlier, you're still paying the FICA on the tips. You're paying your state taxes. You're paying your locality taxes, depending where you live. And in this case, you're still paying the payroll tax because you get a deduction. You get that money back at the end of the year. Okay. Hypothetically, if you are a server or in a tipped industry, hypothetically, and you are not claiming your full tips, and I want to get on this $25,000 deduction. So now you start claiming the full tips. Remember, this is hypothetical. I'm not a server. It's hypothetical. Now you are claiming all your tips. Now you've increased your state taxes. You've increased your FICA tax. You've increased your locality tax. And surprise, you've increased your federal tax. Because again, this is a deduction. You will not be seeing any of this until you file your taxes. So now, in this new scenario, you are paying more. Again, like I said, the refund. Oh, fun fact. I Fun fact, this is temporary. This is only good till 2028. They did not make this permanent. They've made other tax breaks to people permanent, but they did not make this one permanent, which means you only got 3 years. That's promises made, promises kept. I'd still say no. So, again, I stated before, the refund is not immediate. No immediate paycheck change. While federal income tax will still be withheld throughout the year, the savings from this deduction will be realized when workers file their taxes and receive a refund. You still pay taxes on tipped income and then file your 1040 for a refund. Again, in my hypothetical situation, you've just now increased your tax payments across the board, state, local, federal. So, and now let's go into how this benefits the rich, because I want to say rich, I want to say the more well-to-do people in the tip industry. So low-income workers may not see a significant benefit. Many low-income tip workers already have taxable income below the threshold where they owe federal income tax due to deductions. Thus, a tax exemption on tips would not significantly change their tax burdens. Remember, this is a tax deduction, not a tax credit. The average income of a server in Indiana is $30,000, $267. That's including tips and hourly wage. And some earn as low as $20,500. And I got this information from ZipRecruiter. So this is our local waitress, our local bartenders, maybe. People we know in our community. Okay. Now, this benefits, like I said in the beginning, the high earners in this industry. High earned tip workers in occupations such as high end bartenders, sommeliers, casino dealers would be more likely to see a substantial reduction in their tax liability due to the exemption on a larger amount of their income. If you're making $50,000 on tipped income, this would be helpful for you. If you're making $20,000 on tipped income and maybe another $10,000 with normal income, and you already have multiple deductions, you cannot, once you get to zero in your deductions, you can't go any lower unless you get a credit. And this is not a tax credit. So for the average tipped worker, you're not going to see a major change in your tax return, because you're not going to see a change in your paycheck, because they'll still take the taxes out of everything. And then remember my scenario I gave you hypothetically. Say you're increasing your claim every day by $50. Let's just say 50. Let's say 25. That adds up over the week. So now you're paying more state, local, federal. Your FICA tax, Medicare, Medicare, Social Security. That tax has gone up because now there's more money going in, so you're paying more money into it. So they did a lot of play on words here, and they're claiming they've kept their promises. But to me, when you tell me there's no tax on tips, I'm expecting no tax on tips. They didn't promise no tax on tips through your deductions at the end of the year. Using the reasonable man standard, I would think most people thought, I'm not getting taxed on my tips. You're still paying the tax, and then you have to hope you've earned enough to get the full benefit. And if you're already claiming deductions, then and if you're already paying zero in taxes or close to zero, this is not going to help you save any money. You're not going to get any more money. I hate to break it to you. That's just the truth of the matter. Is this administration, when they were running for president, they were just throwing things out there to promise people to make them happy and like, oh, I want that, so I'm going to vote for that. I heard no tax on tips. To me, that meant no tax on tips. It did not mean, oh, a deduction at the end of the year. And if you make too much money, your deduction gets lowered. And if you don't make enough money, there's no deduction for you really, because you, like as I explained earlier, a deduction and a credit are two different things on the tax system. So I'll leave you with that to think about that and see, do you really feel that this was a promise kept to you the way it was described to you and the way you thought it was going to be? That, like, again, it's there's always been that saying, the devil's in the details, and I'm giving you some of the details. And I read you what Scott Bessent, the Treasury Secretary, said, that it's a deduction, and I'll put that up. It's not my words, and he posted that July 5th at 3 p.m. So I think that was this Saturday. He called it a deduction, and you can go look him up at Sec Scott Bessent on Twitter. You can see it in his own words, not mine. I'll put it up, but hey, whatever I put up here, go, if you can verify it, go verify it, enjoy it. I'm not going to put anything up here I can't try to prove, at least. With that said, hopefully we can see what's happening and try to mitigate some of these problems that are going to be arising, and talk to people about these things. Let them know that, hey, this isn't what you think it is. And I mean, it's in the bill. They're not hiding it from you. They just expect you not to read it, honestly. So remember, you have a voice, use it, and see what happens. Take care.